The idea that the yen carry trade drives things the way it used to anymore is just plain silly. To me, there's only two types of people that analyze Bitcoin. Those who think it's going to 1,000,000 and those who think it's going to 0. There's like nobody in between. And the truth is that that's the most likely scenario is in between, right? It doesn't have to go to 0 and it doesn't have to go to 1,000,000. The most crowded trade I know of, which is something most people probably won't be too interested in, but is
We're back with Jason Shapiro, founder of the Crowded Market Report, veteran trader of many decades. He's also been featured in Jack Schweiger's book, Unknown Market Wizards. Check out our last interview with Jason. He's made a number of correct calls over the past year. So link down below for our last interview. Jason, welcome back to the show. Good to see you again.
always good to see you, David.
Always good to have you on. We're speaking on the 10th of February, and it's a bit of a down day for most asset classes today. Stocks are taking a hit. Gold's taking a hit by 1%. Bitcoin's down by nearly 2%. Bonds are up, so yields are down. What is the most crowded trade for you? Or perhaps multiple? The most crowded trades, plural, if that's applicable right now. Let's start there.
The most crowded trade I know of, which is something most people probably won't be too interested in, but is people are very short sugar. Now, I know most people aren't going to trade sugar, and most people aren't going to care less about sugar. And sugar is on new lows, so I'm not saying buy it here. But what I am saying is there's a chance that should sugar turn and start going up, there's a lot of shorts out there that would need to cover if that were the case. And sugar could go up a lot. And that's fine in and of itself. But I would also look to the idea of sugar is obviously a big input into ethanol. If sugar is going to go up a lot, that probably means ethanol is probably also going up, which means crude is probably also going up. So it might be a look through into the possibility of the energy trade going up. We know that the energy stocks have been doing very well this year. And crude by itself has done pretty well this year as well. But this kind of indicates that should sugar, in fact, happen, you could then back into the idea that probably means crude keeps going up too. So that could be of interest because crude is such an important commodity and the price of everything.
For the audience who may not be familiar with your work or maybe our past interviews, you don't really look at price levels as an indicator of when things are crowded. You look at other indicators. So we're going to discuss these other indicators right now. Taking silver as an example, it's a good example because it was clearly very crowded here. But the question I think that every trader has watching the show is, at what point should I have known? And some people on my and other channels have been saying that silver's been getting crowded. Some people have been selling their precious metals by end of January. So clearly they've seen something. But if you were trading this particular commodity, silver or gold, or actually all the hard metals moved at the same time. We can talk about that. But around the end of January, what indicators could you have picked up on? Let's just use hindsight.
None of mine. As far as being crowded and the indicators that I look at, I can readily admit my indicators did not pick this up as crowded. Guilty as charged. I do not get every trade, and here's a trade that, in fact, I was telling people that it wasn't crowded, and I thought that shorting it was silly. Wrong for me. So I don't see this as crowded based on my indicator. Now, clearly, from a price perspective, the thing went up a lot, from a chatter perspective about people all over the world and China everywhere lining up, to get involved with this stuff. Yes, we did hear some of that. And certainly those people got smashed. But I was not the person to look for that trade because my indicators were not showing that and still don't show that. So,
well, what about what does the Commitment of Traders report tell you right now in regards to the hard metals?
It's pretty neutral, to slightly, I would call the market slightly short on that data. So,
well, what is your sentiment right now on the precious metals, gold and silver? I'll put both on the screen right now.
I think it's a tough one. I mean, general retail sentiment clearly was getting arguably, if you're just going by chatter, it was getting pretty bullish. And you would think that with silver moving down 40% in a day, that maybe took some people out, one would think. Um, but again, my stuff that I used to read this didn't get this right. So, um, and that's my main read. So unfortunately, unlike some of the incredible gurus out there, I do not, and my indicators do not catch every single move in every single market. And this one, it has not picked up well. So
I mean, this was
therefore,
clearly institutional trading, perhaps moving the markets, because gold and silver and copper and palladium and platinum all moved on the same day. It wasn't, the retail investors all going back to their bullion dealers on the same day. So it was institutional.
it was certainly something.
Yeah.
It was certainly something. Margin calls and all that stuff. Let's not forget, it happened on the day that Trump appointed his new Fed chair.
That's right.
Who was seen as more hawkish than the other. He was seen as the most hawkish, arguably, person of all the choices. So, if we want to get into sort of the fundamental backing of it all, people were buying these things, and these things should be going up if interest rates were seen as continuing to go down. And then all of a sudden, we got this hawkish guy, and that argument kind of went out the window. And then, the selling begets selling, right? All of a sudden, you get some massive selling, and then you get more selling, and then you get margin call selling, and you can get a move like that. Silver has a pretty good history of making big moves to the downside if you go back through history.
So do we have any indicators that could give us a sense of what institutional traders are positioned for?
Again, the commitments of traders indicate that they're very relative to history. Let's call it long silver. They're long, but they are the least long that they have been in a couple of years.
Do you look at the
does that mean they have to get more long? No, it doesn't mean that. It just means there's a possibility they could get more long, and therefore the market could go back up.
Before we continue with the video, let's talk about today's sponsor, Delete Me. Now, most people don't realize how much of their personal information is publicly available. Data brokers collect and sell details like your name, address, phone number, and even family connections. That's why I use Delete Me. It helps reduce that exposure. It takes just a few minutes to set up, and then they do all the work. They scan for where your information appears, verify those listings, and submit removal requests to hundreds of data broker sites. They also keep monitoring over time, since this information can resurface. I've been using it for over a year, and they have reviewed over 325 listings for my information. The reports show exactly what was found and what was removed, which makes the process transparent. Go to joindeleteme.com/David Lin, link down below, or scan the QR code here, and use my promo code DavidLin for 20% off of all consumer plans. Now, back to the video. Do you look at the duration of a bull market as an indicator of how far the bull rally has gone and perhaps will have left to go rather? Just taking a look at history, and you can just see how long prior bull rallies have lasted for gold and silver, and then just comparing it to the duration and magnitude of the run that we have now. Does that give you an indicator at all?
Not really. That's not how I look at things.
Okay.
I think you can get into a lot of trouble based on doing that type of stuff. It's easy to look back now and say, oh, look how overbought silver was up at the top. But silver was probably overbought for 2 months before it ever got to that top. So if you were selling it based on that, then you were getting run over, right? And I'm glad that, okay, maybe you caught it at the top there if you had any money left to do it, or if you weren't sick of getting stopped out, or if you were, whatever it was, maybe you caught it, and that's wonderful. But let's not do whatever you call history. If you caught the top, great. But I would think it would be very, 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 very hard to find someone who sold silver there, and that was the first time they sold it in this run up, because that wouldn't make sense to me. Anything that would have gotten you to sell silver there would have had you selling silver a month earlier too.
Put it this way:
and it went up 60%.
When silver hit $50 sometime in late October, it very quickly, by end of it stayed range bound for about a month, but then it very quickly at the end of November went from 53 up to 120 in the span of basically less than 2 months. Yeah, exactly 2 months. What
Mm-hmm.
kinds of questions would you be asking yourself as a trader when you're seeing price moves of that magnitude in this short amount of time, when it just keeps going up day after day after already hitting a historic high? Just as a trader, walk us through your thought process just looking at a price move like this.
Well, again, yes, in retrospect, you can say it went from 50 to 120, and that's extensive and it's too much and it's too fast, right?
Mm-hmm.
But you could have made the same argument when it went from 50 to 80.
Yeah,
50 to 80 is a pretty big move in a quick period of time, too, right?
right.
And that's more than 50%. So at 80, you could have been saying the same thing, right? So did you try to short it at 80? Because if you did, it went up to 120, and that wouldn't have worked very well, right? But I'm always asking the same question: is this thing? And I wasn't long silver, fortunately, for that crash, but I wasn't short it either. And I'm a market turn picker. This is one market turn that my stuff and my data did not catch. But I think if you are long, you clearly, and trend followers would have been long this, obviously. The trend was clearly up. And I think what most trend followers do is they're reducing size as the volatility is going up like that, right? Because obviously the more volatility, the more risk. So they're reducing size, and that really, as it turned out, was the responsible thing to be doing if you were long trend following, right? Reduce size as volatility is taking off like that. I think that's the correct way to do it. There were people who, before silver came back down, who don't do that. I know some trend followers who don't do that, and they were absolutely crushing it in the month of January, up ridiculous numbers, 70, 80% just in January. But then look what happened on the way back down, right? They gave a lot of that back, right? Whereas the trend followers who had been reducing size due to the increased volatility on the way up weren't up as much and therefore didn't lose as much. I mean, it's pretty simple, math, right?
I think just generally speaking, taking a step back, let's take silver out of the ticker. Anything that moves up parabolically in a short amount of time, what are the questions you ask yourself as a trader to gauge whether or not you should be chasing the momentum or the trend, or to stay out, or to short? You basically have those three choices. Walk us through your decision-making criteria.
I, for the most part, don't chase trends because I'm not a trend follower, right? I am a counter trend trader. So I am not going to be one chasing trends. So in a massive trend like that, I am not going to be catching that, most likely. Do I want to try and short it? Okay. That is going to come down to whether it's super crowded or not, right? Based on the data that I'm looking at. And if it is super crowded, then I would be looking to short it. In this case, again, it was not super crowded, so I did not get shorted.
After something's already fallen 40% from its top, how do we make the conclusion that we're in the beginning or the middle phase of a trend reversal? In other words, it's going to go lower. Can we gauge that just based on current price action alone?
I personally don't think so.
Okay.
Again, I go to positioning.
Okay.
Did we get a massive amount of selling there? Are people massively short now? And therefore, does that skew the risk reward to where we can try to get long down here?
Yeah.
That's the kind of things that I look at.
So given that
that's how everyone has to look at it, but that's how I look at it.
Given positioning right now is kind of neutral, like you said, what do you do when something's kind of neutral? Do you just stay out, or do you try to?
Yeah, that's my edge. My edge in my view is finding crowded markets. So if it's not crowded, then there's nothing for me to do.
What's not crowded?
No trade is a trade. Let's not forget that.
Okay, that's fair. Okay, so let's just set the table straight. So we have a crowded trade like you talked about at the beginning of the interview, but when something is not crowded, does that give you a long signal, or do you just stay out?
I just stay out.
Okay, fair enough.
For people who trend follow and use the kind of data that I'm talking about, that would probably give them a long signal. If something is going up and it's not crowded, then they can stay with it. Whereas if it's going up and it gets super crowded, then maybe they can get out, right? That's how trend followers use this type of data.
Well, let's just go through several other asset classes one by one. Let's start with Bitcoin next. And I can just tell you from following this space from a media perspective that sentiment in Bitcoin and cryptos overall are rather low compared to where we were a year ago when, the entire world was talking about 100,000 Bitcoin and Trump creating a Bitcoin strategic reserve. The sentiment was quite euphoric compared to where it is now, which is rather lethargic. So that's just my personal input. Let me get yours. What have you been noticing about Bitcoin?
Yeah, the same. In particular, let's go from Bitcoin to crypto. ETH was showing massive long positioning back in the fall. When Tom Lee got involved and there was all that stuff going on, the positioning got massively long. And so once it started, and just because positioning gets long doesn't mean it's going to go down. It just kind of indicates that if it does start to go down, there can be a lot of people that need to get out, right? And that's clearly what happened, right? I think that the Bitcoin psychology is funny because to me, there's only two types of people that analyze Bitcoin. Those who think it's going to 1,000,000 and those who think it's going to 0. There's like nobody in between, right? And the truth is that that's the most likely scenario is in between, right? It doesn't have to go to 0 and it doesn't have to go to 1,000,000. Why can't it just be normal? Like every other market, why can't it just go up and down? And sometimes it goes up and sometimes it goes down. And then, just like every other market, why can't it just be normal? Bitcoin is so bifurcated in that way from the way I read it, that it's kind of silly. I mean, you do the math at Bitcoin at 1,000,000 and it's such a large percentage of the global money supply that seems somewhat silly to me. I'm not an expert on Bitcoin, so don't kill me. All the Bitcoin, perma bulls hate when I say things like that. But for it to go to 0, I mean, and could it go to 1,000,000? Yeah, sure. Could it go to 0? Sure. But, for it to go to 0, it's like the people that make that argument are all about, it's not worth anything because it has no intrinsic value and, it's not used for anything. Well, I understand gold is used for some things like jewelry and all that. I understand that gold throughout history has been a means of exchange, but right now it's really not. And it's been around for thousands of years. So I don't see why Bitcoin has to go to 0 just because it doesn't have those things, right? And it could have them in the future. For all we know, we don't know, I would also make the argument with Bitcoin that, yes, it had massive returns from 2000, whatever, 9 or 10. But that's because back then, nobody was involved in it. And it was very hard to get involved in it, right? You had to have these online wallets and they weren't really very secure. A lot of people were getting robbed on these online wallets and all that. So there was a lot of risk. So where there's a lot of risk, that's where you get the potential for a lot of return. The risk in Bitcoin clearly in the last few years has gone way down. It's simple. It's just as easy to buy Bitcoin as it is to buy a stock. Just buy the ETF if you want, right? So with that much less risk involved, there's probably that much less return involved. Doesn't mean it can't go up. Doesn't mean it can't give you a good return. Stocks have given you a good return over time, and they're plenty liquid, and they're very easy to buy. But they're not giving you 100% a year return. They're giving you a good return. And to me, that's what Bitcoin is at this point. More so.
Okay.
This whole 1,000,000 or 0 thing to me, it seems silly.
So going back to positioning and sentiment, I commented that sentiment from my perspective has been a lot lower than it was last year. What point do we reach an inflection point where sentiment becomes so bad that it's time to buy? I'll give you another personal anecdote, and we can just comment on this, and I'll let you take the reins. I was at the Bitcoin Miami conference in 2023. Well, I was there in 2022 as well, right after Bitcoin peaked in 2021. So basically, the entire community came out. It was at the time, before last year, at the time, it was the highest attendance in the conference's history. In 2023, it was basically half of that, if that. I walked in, the hall was empty. The exhibition hall was basically half filled with exhibitors. It was previous year, it was completely filled up. Back then, Bitcoin was trading at $17,000 in 2023, and that was near the bottom. And I asked somebody, I said, when should we buy Bitcoin? Because it seems like the industry is kind of dead. And she told me now would be a good time. In hindsight, she was right. Sentiment was just terrible. And we should have been selling the top when the entire hall was filled. And we should have been buying when the hall was empty. And that's basically what happened. Last year, I attended the Bitcoin Miami conference. I'm not using this as an indicator. I'm just telling you what happened. Last year, I attended in May. It was in Vegas. It was a record turnout in the conference's history. JD Vance made a speech about the strategic importance of Bitcoin, among other things.
Mhm.
And right around then, it was right around $100,000. Now it's at 68. So the point being,
What was that one you went to? Was that in 24 or 25?
that was 2025. That was May 2025.
Okay.
And Bitcoin, I'll tell you, was right at 90. Yeah, right at 100. So it was hovering around 100 for a couple months. It was right back at 100. And yeah, it was euphoric. 30,000 people turned up. Vice President turned up for a speech. Big players of the industry. And basically now we're at 68,000. So my question to you, Jason, is suppose we have current sentiment now as a gauge. What would you be doing?
Well, when's the next Bitcoin conference, David? And when you go, let us know how many people. Let me know how many people are there. I mean, I think that what you're saying is exactly right, and that's exactly how I try to approach things. Right? The hall, you said, the hall was full. The hall was empty. Well, I'm looking at positioning. Positioning was full. So I'm looking to get short. Positioning was empty, meaning everybody is short. So I'm looking to get long. I think that's exactly the right way to handle things, from a very general basis. And then you need sort of the market confirmation type of stuff. If you sold Bitcoin at $100,000 just because the hall was full, well, you watched it go to $125,000. So that would have been tough. It's easy in retrospect now to say, okay, it's at 68, but you would have had to watch it go to 125,000, be 25% out of the money and not get scared out, which is a lot easier said than done in retrospect, right? But in general, I think that what you're saying, the hall is full, the hall is empty. That's exactly right. So let's see where the hall is now. I don't see the hall as empty here on a positioning basis yet. I don't know why Bitcoin, like I say, forget about a million or zero. I don't know why it has to go right back to $125,000 or why it has to go right to $25,000. I don't know why it has to do that. Why can't it just do what markets normally do? Sit around here for a while, trade between 80,000 and 60,000 or whatever number it is, right? Why can't it do that? Why does everything have to be so exaggerated? I don't know. I don't know, but I guess I do know. It's because that's what gets clicks. That's what gets views, right? And I kind of feel the same way about a lot of markets here. We know damn well, better than anybody. What gets the most views is when somebody comes on and says the market is about to crash. The stock market is about to crash.
Sure.
That gets the most views. There's no question about it. It's also the least likely thing to ever happen. It happens once in a while, but not very often, So people, I think, need to just relax a little bit and be realistic. People ask me, oh, what's the most contrarian view here? I think the most contrarian view here is that markets just act normally. It doesn't always have to be these like crazy moves, all the time. It can just be normal, just like it's doing now. The market is acting, to me, pretty calm recently, right? Where are the surprises is what I like to look at. And I'd say that the top surprise right this minute, right this second is bonds, right? We see one of the largest ever short positioning in TLT in history, meaning people are betting against TLT.
Yeah, here we go.
One of the biggest short interests in history in TLT. We are seeing things like the Mag 7 running out of free cash flow, and so therefore they need to borrow an insane amount of money to keep this AI thing going. So that indicates, negative fixed income. Obviously, if these people have to issue a whole bunch of debt, that should put some pressure on things like bonds and on things like spreads. in the fixed income market, and it's not, right? It's not. Bonds are going up. Spreads haven't budged. That's interesting to me. That's contrarian to me. That's a market doing the opposite of what people think it should be doing. That's interesting to me.
Okay. Well, what would you do with that information?
Well, I'd be long fixed income.
Okay. So you're betting on yields to come down because of positioning is basically what you're saying.
And market action.
Okay.
Takes two. Positioning isn't enough.
What is
You
that?
need the market. You need the market action on top of it.
Well, what does that do with the dollar then? Similar line of thinking, I guess.
It's an interesting question because if that were the case, you would think the dollar would go down. But the dollar kind of bottomed at the end of January. It's come down. Yesterday was a pretty rough day for dollar. But today it kind of was down and rebounded. I see things that are pretty crowded out there in dollar. I have the long Canadian dollar is very crowded, indicating the Canadian dollar has a decent chance of going down, which means dollar up. I have the euro long as very crowded, indicating that there's a decent chance that the euro goes down, which means dollar up. And the yen, is insane, right? After this election over the weekend, that was seen as bearish yen, and the yen did open down at first, and it's just gone ballistically straight up since, right? And even though the yen's gone up today too, the dollar has held. So again, can we get yields to go down and then the dollar to go up anyway? That's a weird idea. I like the weird ideas. I like the ideas that don't make sense, that are happening, because the ideas that make sense, everybody can put on, and it's easy, and the markets aren't that easy, and where people get hurt is when the ideas that don't make sense end up happening. And that's kind of what we're seeing in bonds and possibly what we're going to start to see in the dollar soon. So as a counter trend trader, as a contrarian trader, those are the type of things that I like to look for. A trend trader will go with those other things, right? For the most part, a trend trader is almost a
Let's take a look at the Japanese yen as an example.
It's like a global macro person, right? Is what a trend trader is. At the end of the day, those returns look very similar. Where you come to your conclusion because it's where you see the trend in price, or you come to the conclusion because it's where you see the macroeconomics going, doesn't really matter. Those return streams tend to be very similar: global macro and trend and medium-term trend following. And that's where they make their money. And don't get me wrong, they make money. My hope with my stuff is that when they're making money, I'm backed off, right? And then when things turn and they start to lose money, that's when I can get involved. So that we can both exist in the same world.
What's the sentiment on the yen versus the dollar? I think similar question regarding the dollar, but this dollar has been strengthening versus the yen for basically all year, last year as well. We're at a point where this massive drop here, I think, was because the new prime minister announced new fiscal measures, and her cabinet expanded the deficit, and basically the JGB yields spiked out of control. So we had this one day spike in the Japanese yen, and then it kind of stabilized again. Tell us about what you think here.
It's a tough one. I mean, they're saying they want to raise rates. We know that. That should be bullish yen. It has the last 2 days been bullish yen. On a positioning basis, I don't see very much edge there at all. Therefore, I think it can be pretty volatile on both sides of the trade. So I don't have an axe in yen here. I think that the thing that kind of gets me with the yen in general are the people who are still living in the world of the yen carry trade, right? And they think that the yen going up is the yen carry trade unwinding, and therefore all these other assets are going to go down because the yen carry trade is what finances all these other assets and all that. I think that's so yesterday's news that it's just become silly in my view. Could I be wrong? Of course, but Are people really still doing the yen carry trade in size when they know damn well that the U.S. is cutting rates and Japan is raising rates? Why would you put the yen carry trade on if you know that that's coming? Things adjust over time. Things are reflexive over time. This isn't the 90s, right? This is 2000 and whatever year, 26, right? Things adjust. And I think the idea that the yen carry trade drives things the way it used to anymore is just plain silly. So I would watch out for that thought process.
All right. I want to show you one more headline here. This is from CNBC, and the headline is Market Rotation, Investors Are Selling 21st Century Innovators to Buy 19th Century Businesses. I'll summarize it for you. Basically, it's talking about a market rotation where the tech stocks are selling off, and the author has noticed that industrials, materials, miners, these old, quote unquote, 19th century businesses that have been around for forever, those have been picking up. If you take a look at, let's say, the GDX, okay, which is a gold miner index, for example, that's up 138% over the last 12 months. Let's take a look at how the NASDAQ has done, relatively speaking. In the same period, it's up only 18%. And actually, it's been flat since November. So if you see a headline like that, what does that tell you about sentiment and positioning, if anything, now that the mainstream news has been noticing this trend?
I personally love it. I love the whole idea.
Okay.
Because we know the world we're living in, right? AI, we know it, right?
Yeah.
That's everything here. And when you think AI, you think NVIDIA and you think all this. But truthfully, if you just take half a second to look a little deeper in it, we know damn well where the shortages are to produce the AI. That's everywhere, right? There's not enough energy. There's not enough metals. There's not enough materials. This is where the problem is. And to me, that's where you would want to be invested, in the places where there are shortages. And those are the places, and those are working. And I keep saying to people, like, I have no ability to give you the fundamental story of where AI is going. I don't have a degree in physics. I don't even know how to program a computer. We want to sit here and talk macroeconomics. I can do a pretty good job. I have an education in macroeconomics. I was a good student in economics. I can do a pretty good job about it. I might be right, I might be wrong, but I can sit here and at least make an argument, right? Somewhat of a coherent argument. I have no coherent argument about AI because I know nothing about this stuff, okay? But what I do know, is what the markets are telling you. And this is exactly what they're saying. You can say, well, here's the shortage. This is the theory. Here's the shortages, materials, metals, all this stuff. Okay. Well, the markets are totally agreeing with that, which is the most important thing. I say it very often. I don't care what your take is on anything. You want to be long this, you want to be short this. I don't care for whatever reason, but don't do it unless the market agrees with you, right? Don't fight the tape. Go with the tape. This is a situation where the market is agreeing with you. Right? The materials are leading. The energies are leading now, right? They're crushing the Mag 7 and all that. So that's where you want to be, in my view. Now you're showing me, well, everybody's getting on it because the media is talking about it. Maybe. Well, where you want to get off it then is when it starts to lag. It hasn't started to do that yet. The market will tell you when to get off of it, right? It's one thing, like I say, it's one thing when the positioning is there. It's another thing when the market confirms it. So one thing when you start to feel like sentiment is getting a little overdone somewhere, it's another thing that the market has to confirm it. As far as overweight, I mean, let's face it. If you look at the S&P 500 weighting for the world is underweight these things, right? Energy, materials, these are 2, 3, 4% of the S&P 500, while technology is like 30, 40%, right? So by definition, most people are in the S&P 500 in one way or another. They are underweight these things like material and energy. And for it to get to the point where they're overweight would have to be a massive, massive move in those type of things. So I love personally here the material trade. I'm not an individual stock person. I'm a futures person, but I personally love the materials trade.
Okay. Again, you're not a trend follower. So when you can see that the markets are rotating from one sector to another, that doesn't give you an indicator as to which sector you're favoring. You're looking at positioning of individual sectors. You're not following the rotation, correct?
I'm following it, but
Yeah.
it's not what guides my trading. Um, my stock investments, which are in my personal account, are different than my business, which is my counter trend futures trading, right? My stock investments, I try to look at what I was just talking about, right? AI driving everything. Where are the shortages in the AI trade? Here they are. Okay, is the market agreeing with that? It is. Okay, I'll go with that. That's more of a, you could argue, trend following type of thing, right? But that's how I do my stock allocations in my personal accounts, and my stock investing is
Okay.
based on that right there.
Let's close off the conversation by giving us one or two things you're watching on your screen right now. We've talked about sugar and all the other things. Give us a few other trades that you're just following closely, and then that gives us a reason to follow you as well.
Again, the sugar thing mixed with the then next level of crude thing, based on the sugar thing, is something I'm watching very closely. The sector thing that you just talked about, even though I don't trade it in my fund, is something I'm watching very closely because I think it's incredibly important. The bond market is something I'm watching very closely, right? I think I always watch the bond market closely, but given that everyone's so short the TLT, given that the bonds are going up, and given that I believe that always fixed income investments and bonds are such a massively macro important thing to everything, right? If the ability for the market to provide liquidity to everybody goes away, then the market is in a lot of trouble. It's all based on this whole liquidity thing, and it's given no indication to this point that it is in a lot of trouble. There's clearly plenty of liquidity out there that can move very quickly. We have seen in the past liquidity move very, very quickly the wrong way. So I think keeping an eye on that is extremely important, especially if you're playing this bearish game, which a lot of people seem to continue to be playing. I wouldn't get too bearish until fixed income starts to give you an indication that it's no good.
All right, good. Thank you very much. Let's end it here. Tell us where we can find you.
Crowdedmarketreport.com.
Okay, we'll put the link down below, so make sure to follow Jason there and also his social media. A lot of great information on credit market reports. Check it out. Appreciate your time, Jason.
We're on YouTube. We do free videos on YouTube all the time. Yeah. You can check it out there. Plenty of places to see this stuff.
Let me ask you one more question. I don't think I've asked you. It's just on a more personal note. If you were to look back at your career and you could have done a few things differently, or maybe everything was perfect according to you, and you couldn't have changed anything, would you have changed anything about the way you traded or about the decisions you made regarding your trades, or looking back, did you have no regrets at all?
It's hard to say that. It's a great question. If I did it differently, would I have learned? And if I wouldn't have learned, then would I have gotten to the point that I'm at now? Right? I wish I would have learned quicker. All right? I was slow, as most people are. I was stubborn.
Well, what do you mean slow? How do you define slow?
I was 10 years into this and I was at zero. Okay. I had gone through the roller coaster of making a bunch of money, losing it, making it, losing it, making it, losing it. And then suddenly it was 10 years later and I had gotten nowhere. Yes, I had bought a Porsche that I had to sell. Yes, I had bought, a house that I had to sell. Yes, I had lived a high life that I could no longer live. So I wish I had learned the lessons that I had learned earlier, which would have been very difficult for me or anybody. We really don't learn our lessons until they hit us hard, right? It's very hard to say, hey, it's just like none of us listen to our dads, because we have to learn for ourselves. Our dads are there to help us to learn based on their experiences. And for most of us, including me, say, screw that. I can do it my way. And that ended up being right most of the time. So I wish that maybe I was smart enough when I was younger to be old enough to realize those lessons, right? But again, it feeds on itself. If I hadn't learned those lessons the hard way, then would they have gone in as deep, and would I then have been able to develop the stuff that I've developed now, which were based on learning those hard lessons? I don't know, but I like to wish that I would have taken the chance to learn them earlier.
Do you see traders that you're either mentoring or observing or working with you today making some similar mistakes to you in the past?
Mm-hmm. All the time.
What would you say to them?
Keep it small. Learn while you're trading small. Okay. Don't think that you're smarter than everybody, because you're not. Just because you have a good run doesn't make you smarter than everybody either. It's a very difficult game. Again, I don't know that anybody's going to listen to this. Trade less, not more. These are the things that I would say. I don't know that they would listen. But those are some of the very simple advice that I would give.
Trade less in terms of frequency or the amount of capital. What do you mean by that?
Both.
Okay.
And these are not things that I made up. These are things that you will learn if you read and listen to some of the best traders that ever lived. They all say very similar things. And maybe you're smarter than all of those people. And if you are, then hey, go for it. But if it comes to the point where all of a sudden maybe you're not, which again took me 10 years to decide, then start thinking about those things.
One final question.
It can be done. It just
the best traders that you've observed, besides yourself, that have generated alpha over the years, what have they done differently relative to, let's say, a rookie trader we're talking about now?
They don't mind being wrong, David. Be wrong, get out. It doesn't mean anything, right? It's not an ego game. You're going to be wrong. The key to it is lose a very small amount of money when you're wrong and make a lot of money when you're right. That's the key to this whole thing. This game is not about predicting the future. This game is about trying to find asymmetric risk-reward opportunities. In other words, trying to find opportunities where you can make $5 and lose $1 if you're wrong. That's what this game's about. It's not about predicting the future.
Okay.
And that's what I think the best traders understand.
Jason, thank you very much. Follow Credit Market Report. Link down below. See you next time, Jason.
All right, David. Thank you.
Thanks for watching. Don't forget to like, subscribe.